Vincenzo's Go Crypto Investing this October the 8th, 2025, and we create history again in the commodity and specifically gold and silver bullion now has joined it as silver bullion, I believe, has taken out its all-time high. It had taken out its all-time high from 1980 a couple of weeks ago, and you can see at least on the daily closes in 1980. Oh, that was the weekly. We need to get into the daily. See, the weekly was down at $1 or at $41. But if we scroll back in the daily, because that would have been a weekly close, wherever it closed at the highest point for the week. Excuse me, while we scroll back, it takes a little bit longer in the daily. But you can see, oh, I guess that's all we really got up to in 1980, 41.70. Thought we were higher than that. So we took out that quite a while ago, then at $41. And then the most recent high in 2011, you can see on the daily close, we have not, I correct myself, we have not taken it out. On the daily close, we're at $49.88. And I do not believe I gotta make sure what price that I'm in, but we would not have breached. This is the futures. So in the futures, 49.85, and we're at 48.46 with the silver bullion price, almost an all-time high. But you can see this is the one, the spot price. You can see spot price back in 2011 on the daily close. Oops, we don't want to call out. We want a price note. This is very exciting times. Bell notification, comment down below, like the channel and share to become an asset millionaire. At $49.91, it closed a daily candle in 2011. So we are just below that today. And then you can see that's what I was looking at before. The spot price in the futures were much different back then. And you can see we did clear the 1980 at $48 and change. We're sitting at $48.50 in the silver bullion price. We've been extremely bullish on the silver bullion. We've been extremely bullish on the gold bullion. We've been extremely bullish. I cannot repeat this enough. Extremely bullish on the mining stocks associated with the corresponding bullion. And we've been bullish since we made this channel in 2020 in the springtime, and the silver bullion was at 16 to 1750, and the gold bullion was at about 1650 to 1700 an ounce. And we told you, and now we've created a beautiful chart with information. We'll make it even more beautiful as the time goes on, but significant events that have taken place during the silver bullion, including the 1918 Pittman Act that forced the U.S. to sell 350 million ounces of silver, mostly to Britain, you must say. Was that the U.S. in a conspiracy land paying Britain off for getting new land, right? Were they buying the land from Britain, forced to sell all that silver bullion? And then the price tanked, right? There was a lot more stuff back then, but I just started creating this chart. Then you can see 1979, 1980, Hunt Brothers buy all the physical silver bullion to create a short squeeze, and it did. And the pump started happening much before the Hunt Brothers got involved in it. But you can see from around the swing low in 71, the price of silver went up 43 times itself. But in 1979, late 1980, when the Hunt brothers got involved and had the blow off top, you can see from January of 1979 all the way to the end, it went up 735% in 1.5 years, right? At the end of a 10x blow off top, right? Because it had a 34x move and the Hunt brothers manipulated. But after that, the central banks and big players were manipulating the silver bullion price, and people were speculating on it for a long time. And this is part of the criminal manipulation and this was part, not my own opinion. People got held accountable for criminal manipulation, and it's the same sort of thing that goes on in the crypto sphere. And it's the reason that we're becoming asset millionaires. And that's the reason you're here. Free subscription button down below and a bell notification to not miss any of these important videos that you're going to get and going to need to become an asset millionaire, because you must understand critical things. That's right. You must understand critical things. You must understand asset inflation. And you must say, well, asset inflation, A, what is an asset? And B, why does it inflate? And C, how does it inflate? Right? And D, what causes it to inflate? Then you need to understand dollar devaluation and currency manipulation, right? and understand what dollar devaluation does and how it makes certain assets inflate just by the dollar going down. And and that's what we're here to be, asset millionaires, and that's why you're following this channel. And we laid out after that, you can see what we were talking about there. They were manipulating the physical bullion in the paper market on contracts, shorting it, and a bunch of people got caught, and it was part of a 72% crash in silver bullion from $49 to a swing low of about $8 and change. Right, where do we come down to? $11.42. And then part of what came out of that is big banks, and Deutsche Bank was one of them. In 2015, U.S. fined several banks, including the benchmark Deutsche Bank, uh, precious metals price manipulation. Right, they got caught manipulating the price, forcibly wanting it down. Right, and the government only fined them because A, the government wanted the price suppressed down, and B, it's the bank. Right, the banks, the federal banks, central banks, and governments are intertwined. Right, but you can see there's been a lot of manipulation throughout its history with the silver bullion. Silver crash due to shorting paper silver manipulation during the financial crisis, right? And then as we went to all-time highs, uh, Comex increased and hiked margin rates as interest rates were rising, and that in turn started to crash the price of silver. But we put this out there for y'all before we move on here, because you're all here for the crypto news with Bitcoin near all-time highs, right? After just setting an all-time high. But we laid out the cup and handle that we were in the macro time frame, right? There's your 3 decade long cup where we pumped to 48 and change, and then we met it 3 decades later in 2011 at $49. Ever since 2011, we were in the handle, which this was your handle, your down and sideways consolidation. Ever since about 2019 or the COVID capitulation, that was our back test on support of the handle. And now we're pumping at the neckline, and we've now breached the neckline, pennies away from an all-time high. And a technical target on the breakout is $200, but our initial target is $75 to $100. But a technical handle breakout is $200, and then a full cup and handle breakout is $746. And that seems pie in the sky, as does 200, as it used to 75 when the silver bullion was down here in purple when we made our first videos on this, when it was at $16, $17. 50 seemed like pie in the sky, let alone 100. But those are the targets. We're going to get there. The silver bullion is just days away from an all-time high. I think it'll happen probably tomorrow. Gold bullion hit another record high and is just less than $50 away from, if you can believe this, $4,100 on its way to 5,000 and eventually 10. We are well past our $3,500 target on our cup and handle that we made and predicted back in 2020 when the gold bullion was at 1650. The mining stocks obviously continue to soar along with it. First Majestic Silver now is gapping up. It's gapped from $10 to $14, $4 a share. I think it's going straight to 20 before it starts to cool off and consolidate. But you can see we're not there yet. We're still $6 away. Silver Corp is probably going to 10 on a gap up. Kinross has already made the gap. When I say gap up, that is the gap up. 5 years, you can see from the beginning of the gap, 576%, and it's now nearing its all-time high. Barrick Gold has made its gap up, but I still got more. I think it's going to 40 before it slows down. Pan America Silver, obviously at its gap up, it's up from its swing low at about $13. It's up 189%, right? Almost 200%. Dolly Varden, I think, is about the gap up from $4 to $8, right? And that's very important to understand that. You can see if we look at the Bitcoin price and get right on into this, the Bitcoin price just set a new all-time high, but you can see the Bitcoin price is struggling still, trying to stay and scratch and claw its way up into this. Let's get into the daily. In this channel support, it's a 3.5 year critical channel support. The moving averages are just slithering up and sideways, but not really a big uptrend. And the price is staying, and it has now hit day two candle hits right there on the major lower support after hitting its new all-time high. It looks like it hit another one there. at 126,245.19 unofficially. And you can see then after that, the next 2 days are what you would expect. We're back testing that major support level, right? The 3.5 year rising channel. And if we're going to hit this and hold it and confirm it as support, you're going to see a big shoot back up into here where you would breach the 130 to 140 real quick. And that would signify that this bull trend is continuing. We have not topped out yet, right? Option B is you just continue to stagger your way up. You could create a new all-time high simply by just riding lower support because it is uptrending at a pretty good clip day over day, week over week, right? But if you fell and fall back below this and you confirm below this, it would signify a big fall. You would not be able to hold the 50 or the 100. I don't believe you'd be able to hold other than a slight bounce on the 200-day, and it would end up diving you all the way down to $95,000. That's right, $95,000 on a pump, on a break, on a pattern change to the downside, right? And that's what we're looking at here in the Bitcoin price. Option one is hitting that 156 target. Option two is we're starting to have a structural pattern breakdown. If we go look at the Ethereum price, you can see we had a ferocious rally all the way up to nearly a new all-time high, but a swing high of just below $4,771, creating what looks to be a Bart Simpson topping out pattern now, because if you zoom that out a little bit and you zoom that out a little bit more from where you started this big pump, you can see what looks like you have four tops there, which could be a Bart Simpson top, or this could be a consolidation on the neckline support, which is sitting at 4,100 and change. The 50-day moving average on a retest will not hold, right? It would slip all the way back through. If this can't hold the 50 and slips it, I don't believe the neckline support would hold. I don't believe the 100-day moving average would hold. I think the next move down would be knifing down towards the 200-day moving average if you flip bearish and can't hold the 50, which is sitting down there now just ever so slightly. That's right, ever so slightly above that green support and resistance box at 34.85. Now, if you do hold support and you continue the uptrend, your next leg out of this consolidation is going to shoot you to between $52 and $5,500 is your next leg to the upside, which would be 50% of the way there. To get to the $10,964 technical target, right? So this is very critical and very exciting times in the Ethereum price. The XLM price had XLM and the XRP both had equally as big falls yesterday. And you can see the big fall yesterday, it got wicked on the 100-day moving average and was sitting above it the last time we made a video. Then it came down even farther today, and actually you can see where the wicks consolidated down. You can see we broke that today and actually hit just above the 100-day moving average, and now we're above the 50-day moving average. This is a very critical structure of the time, because what has to happen here now is you have to get the buyers back in and breach above this 41 cents and make a run at that 43 cents, because if it doesn't do that and it starts to fail and it slips back below for any length of time or by any amount, this 50, it's immediately dropping to the 100. It'll lose the 100, and before you know it, you're going to be ending up back on to 36 cents, which would then not hold, and you would have to make full body candle touches on the 34 cents in the short term. So it's very critical in the short term that you stay above the 50. You're slightly above it now, because if you slip it, you're going bearish, right? The same with the XRP. You had a similar dump yesterday. Today, you bounced off of your underneath pattern breakout right there of this following wedge that you've been in, where you've had descending upper resistance since that $3.66 high. You've had descending lower support, and you can see you got rejected by the 307 again, but this time you came back down and you're holding a critical support zone, which just so happens to be the 100-day moving average. But for any reason, if you can't get back above the 50 and you come back to the 200, you're going to slip that. You're going to end up back in this channel. And unfortunately, you're going to end up all the way down here at the $2.56. First, make a temporary stop along the $2.63, a la AKA the 200-day moving average, right? So that is also very, very important there. If we look at the palladium is continuing to skyrocket to near 10-year highs, because they look like they're fast and on their way to another massive bull market. The 10-year government bond is at 4.1%. The U.S. Treasury at 30 years is down 0.19%. So basically doing nothing, sitting at 4.76%. If we look at some historical history that I thought was very interesting, right? If we look at some historical history, and we had to make us some charts. Historical and political theorists have long tried to measure how long great powers typically last before decline or collapse. While definitions vary abroad, consensus shows a pattern, right? Roman Republic, 500 years total. Internal decay, over expansion, corruption, invasion, right? And corruption, over expansion, and debt and debasement are going to become popular. I don't know what this word is. Empire, 1100 years, gradual contraction, innovation, loss of trade dominance. So they were mostly trade dominant. Ottoman Empire, 600 years. Bureaucratic stagnation, military defeats, nationalism, Spanish Empire, 300 years, overtaxation, costly wars, colonial revolt. That's a more modern right there. That sounds similar. British Empire, 250 years, finally folded in 1950. World War II cost, decolonization, rise of U.S. and USSR. Mongol Empire, 160 years, uh, fracturing, loss of unity. Soviet Union, 69 years, economic stagnation, internal dissent, arms race cost, and really, it was everyone was poor there. So the observation was famously summarized by the British historian Sir John Glubb in The Fate of Empire, 1978. He found that most empires follow a roughly 250-year lifespan, often through these stages: pioneering, expansion, conquest, commerce, prosperity, and that's where these people need to stay because that's where it's the best, but they never do that. They always move on. Affluence, uh, intellectual, cultural flourishing. And that's usually the nonsense where everybody gets soft, everybody deserves this, everybody has a right to everything, and you get too rich for your bridges. And that's usually what starts the decline. Then the decline starts, descendants, and then decline and collapse, right? I would say we're in decline and collapse the last 10 or 15 post 2000 in the United States. So, how does America compare? Found these in expansion 1776 to 1900 westward expansion, institutional rise, commerce and prosperity, trade, innovation, boom. 1900 to 1950s, the Industrial Revolution and prosperity for all. Affluence and peak power, cultural global influence, 1950 to 2000. Uh, Signs of descendants and strain, internal division, inequality, debt, declining institutions, 2000 to 2025, political polarization, wealth gap, geopolitical challenges, China, BRICS, etc. And part of what happens there is you get a central bank, and the central bank finally got into the US and snuck their dirty, diseased hands into the country in the early 1900s. And as the central bank infects itself into a nation and expands into the government, they start creating debt. They start devaluing the money because now the central bank, not the people, that's right, the central bank, not the people or the country, owns the money. And one who owns the money owns the country and has the power. They start debasing the currency by printing money and manipulating currency supplies, right? And as the debasement starts, the prosperity and the boom starts to slowly grind to a halt and then starts to turn the other way. And then you have massive debt, right? Unlike past empires, US has global influence, but it doesn't matter. Internal reform, innovation, crisis response, reset, decline, right? But then if you look at historical lifespan, there's the Roman Empire, 500 years in a chart. The Brazilian, I don't know what that empire is, 1100 years. The Ottoman Empire, 600. The Spanish, the British, the Soviet Union, and the United States. So you can see the United States out of the top two, four, six, seven. We have taken out the Soviet Union. We are about to take out the British Empire. We're having a mass surge towards the Spanish Empire, but we're still 51 years away. But we're only 1 year away from knocking the British Empire off its pedestal, closer down to the bottom next to the Soviet Union. And then we're still far behind the Roman Empire and the Ottoman Empire, right? Uh, and then you can see the typical life cycles based on historical patterns. But then I got a better one here I had it make, right? I put in where I think we're at. You can see over a 250-year span, you can see the first 0 to 50 years is usually pioneering and expansion. And then at the end of that period, you're in conquest for the next 50 years. And then towards the end of that, you're in commerce and then affluence, right? And you can see it all. And you can see the Roman Empire where they started to where they peaked right there at 150 years. The Ottoman Empire peaked about 175 years. The British Empire peaked at 200 years and then fell off a cliff at that same time, right? You can see the United States right now at 2000 started our decline, and now 25 years later we're getting, or 50 years later we're almost to that 200, or 25 years later we're almost to that 250-year mark. I still think we got a little bit of time left, but as you do know, I think we're going to have a big financial crisis, and kind of like we're reliving through the 1920s right now. So if you want to know where we're in 1925 in the fall, about to turn into 1926. So if you want to know what's going to happen in 1920 in 2026 in the gold market, in the financial market, wars, look and see what was going on in 1926. These are just my own personal opinions. I am not a financial advisor, nor would I ever tell any one of you to buy, sell, or trade anything. If you want to help support the channel and help this movement grow, build, and grow your own education, it's as cheap as $3.99 a month. It starts with this. Help support the channel. Share it, follow along, and join the movement to become an asset millionaire. Peace and love. The Rock Bro, Jay.